Imagine making $7,578 in just 1 week with only 5 trades. And I know it might sound completely bonkers, but that's exactly what I did, and I'm here to show you how. So the strategy that we are focusing on is called the previous day high and low strategy. And this is surprisingly very simple yet powerful method used by Forex traders worldwide to kind of identify the key levels of support and resistance based on the previous trading day's price action. So the reason this trading strategy works so well because the high and low points from the previous day shows us the extremes of market sentiment and volatility, and these levels highlight where the buying and selling pressures were the strongest, making them very crucial to watch in the next trading session. So let's actually break down the process of identifying these levels on a daily chart, as trust me, this will make way more sense once you see it in action. So first of all, open your trading platform. For this, I will use TradingView, but you can use any other trading platform like MetaTrader or any other charting tool you prefer. Next, you have to select the currency pair you want to analyze. So for example, let's take Euro-US dollar, which is the most traded currency pair, and then we have to switch to the daily time frame to clearly view each day's price action. Now what you have to do is to focus on the most recent candlestick closure on the chart, as this candlestick represents the previous trading day, and then simply identify the highest point that the candlestick reached. So in this case, this wick over here is the previous day's high, and then of course similarly you have to find the lowest point that the candlestick reached. So this wick over here would be the previous day's low, and all you have to do right now is become a Picasso, and you can grab a horizontal line tool and draw horizontal lines at these levels to mark them on your chart. So now that we have identified the key trading levels, let's actually talk about how to use this trading strategy. And there are two main ways to trade them, which is trading breakouts and trading reversals. So the first way to trade the strategy is by looking for breakouts. For example, when the price breaks above the previous day's high or below the previous day's low, it often signals a strong continuation of the current trend. And if you want to trade the breakout, you can enter position as soon as the price breaks through the high or low. However, since we are not breakout traders, and what I always do and recommend for you to do as well is to wait for a retest before entering the trade. And the reason behind this is that breakouts can often be false signals. So by waiting for the retest, you give the market time to confirm that the breakout level is now standing as a new support or resistance. And this additional confirmation can help you avoid entering the trades on false breakouts and actually improve your overall reliability of your trades. And the second way to trade this strategy is, of course, by looking for reversals. And I can't lie, I used to avoid trading reversals because I'm a trend following trader at heart, but I have been practicing a lot to trade them and I got really good at it, and it seems like this trading strategy is what I really needed in my trading knowledge backpack. So for example, if the price approaches the previous day's high or low but fails to break through, it can indicate a potential reversal. And this failure to break through suggests that the buying or selling pressure just wasn't strong enough to continue the trend, which could mean the market is likely to change direction, and this provides an opportunity for you to enter the trade in the opposite direction. Now, both of these trading methods can be effective, but as you know, it's very important to use additional confirmation signals such as candlestick patterns, chart patterns if there is any, or even technical indicators to kind of increase the reliability of your trades. So let me actually show you the first trade I took following this trading strategy, and I will also cover the importance of how to set your stop loss and take profit levels effectively. So this is GBP USD on the daily chart, and the first thing we want to do is of course mark the previous day's high and the previous day's low, and this is Tuesday's candlestick closure. So once we have both these levels marked out, we want to go to the time frame we want to trade in, and we are going to use the 15-minute chart. So in this example, we can see that this whole range represents Tuesday's price action movement. Now we want to look for any trading opportunities in our current trading day, which would be obviously Wednesday. And essentially, you want to wait for either a break towards the upside or the downside, followed by the retest of that level. So let's play this out and see exactly what happens right here. We can see that GBP is gaining a little bit more bullish pressure, and now we have officially broken above that previous day high. What we are looking for next is a retest of this previous day high. So just like so, let me quickly zoom that in, and as you can see, even though the sellers aim to push the price back down below that high, buying pressure overpowered them, causing this nice retracement of the previous day's high. And this is ideally where you would want to enter your trade, but in my case, I executed this trade on this bullish engulfing candlestick closure, which is a great additional confirmation that the trend should continue. Now, when it comes to placing your protective stop loss, I love to incorporate any additional price action indicators, such as, support levels or technical indicators like the 20 and 50 moving averages, which I have been using for the last 6 years with a great success. So with that in mind, we have this nice additional support zone here, and we can also see additional dynamic support provided by the moving averages, which are trending below the candlesticks, suggesting bullish sentiment in the market. And for your profit target, you can open a 1 hour or even a 4 hour chart and look for any previous highs or resistance zones. So in this case, if we go to the 4 hour chart, we can see this big rejection just over here. So since the price action reacted around this zone, this would give a nice 1 to 2.6 risk to reward ratio. Alternatively, you can even target this 4 hour resistance level, which would increase your risk to reward ratio even higher. And for your stop loss, of course, you want to go back to the 50-minute time frame, and you can place it below the previous day's high level and below the moving averages, just like I did with this trade. And as you can see, the trade resulted in a profit of $1,176, which in this case was 39.2 pips. So consider one more trade I took, and of course later on I will show you the trade tracker for the rest of the trades. So this is AUD/NZD on the daily chart, and as you can see, I have the previous high and low marked on the chart. So now let's switch to the 50-minute time frame, and this is actually the reversal trade I spotted just before my bedtime, which turned out to be worth sacrificing my sleep for the dollar. So in this case, AUD/NZD failed to break this previous day's high multiple times, which simply indicate a powerful bearish signal because buyers weren't strong enough to push the price up. And as soon as I saw this long upper shadow candlestick followed by a bearish engulfing candlestick closure and the next bearish candle breaking this minor support, I knew I had to enter the trade immediately, basically placing my stop loss above this level. However, if we pull up an hourly chart, we can clearly see that this is a higher time frame resistance that has been strong with, multiple failures to close above it, indicating bearish market sentiment. And based on my experience, it's likely that the price will start to drop to potentially retest the previous day's low zone. So let's play this trade out, and as you can see, it indeed reacted to the uptrend but eventually broke below it because sellers overpowered the buyers, and it actually hit my profit target with this one huge ass candlestick, which at the end resulted in a profit of $577. Okay guys, so here are the rest of the trades that I took. They were mainly taken on a 50-minute chart, and when I was testing this trading strategy out, I had to set alerts for certain trades. So yes, my sleep was sacrificed again, but just because I wanted to fully commit and see the results myself before I shared with you all. So here you are, 6 trades actually in total, $7,578.38 in the total profit. And considering that it took me a week to achieve this following the simplest trading strategy ever, what else could you want? Of course, patience is key here because I had to wait for the right time. I had to wait for the right setup to form. And at the end of the day, patience is something you have to cultivate to succeed in trading. So if you found this video helpful, then definitely let me know in the comment section down below. Join my VIP trading community because we are literally smashing the markets every single week. Make sure to check out this video right over here, and I will see you in the next one. Bye!